Tonight, I need you to understand why a superpower just blinked. On January 1st, 2025, the People's Republic of China made the move that geopolitical analysts have feared for a decade. They officially placed silver under state trading export controls. The message from Beijing to the global market was unambiguous. Our silver is now a strategic national asset. We are locking down the supply. The immediate reaction was predictable panic. Industrial manufacturers in the West scrambled to secure inventory. Analysts screamed shortage. The price of silver began a relentless climb. It seemed clear that China, the world's largest consumer, was preparing to hoard every ounce for its massive domestic, solar, and electronics industries. But then, in October 2025, just 9 months later, China did the unthinkable. They didn't just tweak the policy, they completely reversed it. In a single month, China exported a staggering 660 tons of silver. That is the largest monthly export volume on record. And here's the kicker. It went straight to London, the very heart of the Western financial system they were supposedly cutting off. This wasn't a gradual policy shift. This was an emergency dump, a massive injection of physical metal designed to flood the market and break the price momentum. And here is the anomaly that defies basic economics. It failed spectacularly. Despite flooding the market with $37 billion worth of metal, silver didn't crash. It didn't even slow down. Instead, it accelerated, hitting an all-time high of $66.21 in December. Why did a superpower reverse a strategic resource policy in a blind panic? And why did the market completely absorb a record-breaking supply dump and keep screaming higher? The answer lies in data that Beijing tried to hide, in a structural crisis that can no longer be contained. To understand the panic behind the October dump, we must look at the data from the Shanghai Futures Exchange. This is the barometer of China's domestic supply. And the readings are catastrophic. Let's rewind to January 2021. Shanghai warehouses held a healthy 3,911 tons of silver, a comfortable buffer. But watch what happens over the next 4 years. As China's solar production ramped up exponentially, that stockpile began to evaporate. By December 2025, that inventory had collapsed to just 780 tons. That is a 75% wipeout of visible silver stocks in less than 5 years. This is critical to understand. China wasn't restricting exports in January to build reserves. They were restricting exports because they were running out. The math is brutal. In 2024, China's mines produced roughly 3,300 tons. Yet their industrial machine consumed 19,000 tons. That is a domestic deficit of 15,700 tons every single year. For years, they filled this gap by draining stockpiles. But by late 2025, the stockpiles were gone. The January ban was a desperate attempt to keep domestic silver inside China to feed the solar factories. So why lift the ban in October? Why export 660 tons when you are starving for metal? Because a greater crisis emerged, one that threatened the plumbing of the global financial system. Here is what happened behind closed doors. The London Bullion Market Association was experiencing a severe physical squeeze. While paper contracts traded in the $40 range, major industrial buyers attempting to take actual delivery were being told there was none available. Inventories in London were dangerously low. Buyers started offering massive premiums over the spot price just to secure physical metal. Normally, silver flows into China because Shanghai trades at a premium. But in October, the London premium became so violent that it reversed the flow of global trade. The arbitrage became irresistible, or more accurately, necessary, to prevent a complete market breakdown in the West. China became the supplier of last resort. They had to raid their already depleted Shanghai stockpiles to bail out London. This reveals the mechanism driving this market. It is not a cycle. It is a death spiral. It moves in 6 stages. Stage 1, China imports heavily. Stage 2, solar boom consumes stockpiles. Stage 3, Shanghai inventories collapse 75%, triggering the January ban. Stage 4, the ban starves the world, causing a London squeeze. Stage 5, China is forced to dump emergency supply to save the pricing mechanism. And finally, stage 6. Prices rise anyway because the deficit hasn't changed. The most terrifying aspect for short sellers was this. Why didn't 660 tons crash the price? The answer changes this from a financial story to a physics story. Silver has the highest electrical conductivity of any metal, period. Physics doesn't negotiate. In 2025, the solar industry shifted to TOPCon and HJT panels, which require 80% more silver per unit. The 660 tons wasn't absorbed by speculators. It was inhaled by manufacturers, terrified of production stoppages. Add to that the AI revolution. Data centers require silver connectors to handle immense loads without overheating. You can't use aluminum, you must use silver. This structural deficit is now colliding with geopolitics. In 2025, The U.S. Geological Survey officially added silver to its critical minerals list. This enables the U.S. government to use national security authorities to secure supply. If tensions worsen, silver becomes a weapon. But ultimately, this comes down to cold, hard math. As of December, China's remaining visible stockpile is 780 tons. Their industry consumes 1,580 tons per month. Do the division. That leaves less than 14 days of visible supply cover. Even with hidden reserves, we are talking months, not years, before total exhaustion. China's October dump was supposed to calm the market. It failed completely. You cannot dump your way out of a geological deficit. The illusion of abundance is shattered. The scarcity is the reality. Tonight, realize that the transfer of wealth has already begun. The question isn't if it happens, but where you will be standing when the stockpiles hit zero. This is veiled wealth. Stay informed, stay engaged, stay curious.